Hello there, welcome back to the channel. Welcome to another video at Daily Pips Trading, where we dive into price action, where we explain how YT2025 mentorship on ICT's channel works, and we dive into the precision of my own model, which I developed in 2019, which is called the Picasso's fair value gap. So stay tuned. I'm not gonna keep you waiting for too long. We have 4 actual positions that I want to review. This is not gonna go deep into the theory. This is gonna be everything that we already have learned about the midnight opening range, regular trading hours opening range, the opening range at 9:30 itself, how to use that, how to navigate it while list opening positions, looking for daily targets. So before we start diving into the chart and going through the trades that we took together during the live stream on this Monday, leave a like to the video, subscribe to the channel, and if you're not there, you're missing out because we're doing this every single day on our Discord community. So to begin with, we're just gonna go through the whole daily range where we open up here at midnight on Monday the 24th of February. And first thing first, yes, of course, we're gonna use the replay mode to get through this because it's gonna be a lot easier for me to explain things. We're gonna measure the midnight opening range, right? I'm gonna measure it for one side of the marketplace and I'm gonna measure it for the other side of the marketplace. And we're gonna literally just allow the marketplace to run up until the macro comes into play, right? So let's speed this up a little bit. Take a look already here. The marketplace finds a top at the 1 standard deviation level here at the top of the midnight opening range, right? We're now coming back into the range a little bit. Fair value gaps holding the price. Again, we create a double top. This is gonna be our possible draw on liquidity at some point, right? We're very interested to see initial opening, right? And the initial start of the day to see for possible draws on liquidity later into the into the 330 macro. And let's watch now how the marketplace is gonna go lower, going below the midnight opening range, right? And towards what? Towards the 330 macro that we're always incredibly interested in to participate, right? So I'm gonna allow the marketplace to go without us up until the macro starts, right? 3 o'clock comes, we let the marketplace go a little bit lower, and now the interesting and the beautiful things start. We are in the macro almost, right? So 330 macro is starting at 320. I'm gonna measure that and we're gonna go up until the 340 right here. And my target is, just like I said, the buy side resting up above. And how high can the marketplace go? One standard One standard deviation above the marketplace, which is 21,811, right? Surprise, surprise. Right before the macro starts, the marketplace finds a bottom here. Very random level. We already talked about it. That new week opening gap this upcoming week is gonna be very, very important for us. And we invert this fair value gap on 1 minute chart right here, allowing us to do what? To take our trade entry long, right? Take profit can go to the upside right at the 1 standard deviation level of the midnight opening range, right? And we're just gonna allow the marketplace to run, right? So 2 key points here, right? We watch the midnight opening range to get down the standard deviations. We do that to look for possible draw on liquidity towards 330 macro, right? We have a very clean draw on liquidity higher at 21,800, right? Where we have a double top, which is a very random level where we have a standard deviation of the midnight opening range forming, right? And now we just look for a model. Model this time is the inverse fair value gap that we allow to run the marketplace high, right? We got a secondary entry right here, right? You could have entered from the inverse fair value gap itself. Macro does the job. Macro starts sending the price higher, right? I'm not kidding when I say that. I think a few guys on our Discord community, if you guys are gonna be watching this, you caught this trade. And look how beautifully this marketplace tops 1 standard deviation of the day. So this is the first trade that you could have taken. This is me showing you how the 330 macro works, right? Not the first time you guys are seeing this, but I really wanted to make this video to showcase you how we can treat that macro towards clean and clear draws on liquidity while list just executing the model that can be presented of a inverse fair value gap, breaker block, YT2025 pending out, but drawn liquidity is formed by the macro that appears during the midnight opening and using the standard deviations as well, right? So remember the top, take a look onwards, how many times the marketplace tags it. Look how beautifully the marketplace never goes above it. The marketplace just wicks above it and starts running lower. That we're not really interested, because now the time is coming towards the price delivery at 9:30 and 9:30 opening, and the overall market open at New York. We're back at the marketplace now, which is looking to open up at 9:30. Of course, we're using the trade recap system, but we went live at around 9:15, and we were chatting with the guys that listen. There's a very nice breaker block that is gonna send the marketplace lower. Right? We have a high, a low, a higher high and lower low right here, right? Structure gets broken below this swing low, and the last down close candle, which is right here before the run to the upside, is a breaker block, right? First entry of the day happens here when we find the breaker block and we are interested in going short here, right? Let me open my object tree because I want to show you a few things that kind of support this move to the downside, right? That makes me interested in this move to the downside. First thing first, initial drawn liquidity, I have sell side resting down below, right? Because we're interested to see where sell side rest or buy side rest, starting with 7 a.m. right onwards. 7 a.m. onwards, sell side is resting down below. And right down below here, we have the regular trading hours close from Friday previous, which is Friday low, and we have the new week opening gap as a possible drawn liquidity, right? So I'm gonna let this go. We have a first possible trade entry right here, but I would never take a trade while the wick comes into a play like this, right? But because we started bouncing lower from here, my interest becomes quite valid here. Again, I wouldn't have much interest into going short immediately here, because a wick like this, first of all, I wouldn't be able to react, and I didn't, because we were literally talking about this trade while I was live streaming. But we had a second opportunity to go short right here from the exact same breaker block that drove the price lower. So first condition presented, breaker block entry was given, the marketplace started running lower, took sell side, and this is the second trade entry on the day for Monday trading. You can screenshot that, breaker block delivering beautifully. When? Right on the time when we are interested for the liquid to start being run through. 9:30 manipulates the price, and as we all know it, sends it lower. But let's take a look at what kind of trade entries we had an opportunity to participate in while the marketplace was open 10 a.m. and onwards. For the third trade of the day, we're gonna use the lovely thing that we are learning together, is the first percentage for value gap, which gets inverted and becomes a Picasso's for value gap, where we look when we have a pretty normal, pretty static in terms of how big it is. Regular trading hours range for the regular trading hours close to get attacked, right? So we have the first percentage for value gap right here, where the marketplace opens up higher, starts running to the buy side, right? Takes a little bit of buy side liquidity, but still is able to stop at the same breaker block, right? The breaker block never allows the marketplace, the candles, to close above it. And surprise, surprise, it starts running lower. And as soon as this first percentage for value gap gets inverted and becomes the Picasso's for value gap, this is where you enter your trade. You enter a trade on the next candle's open. You don't want the most previous high to get run through, and you target, just like we've been discussing throughout the previous videos that we released for you guys, and I very much hope you enjoyed. We attack the regular trading hours close. I'm gonna allow the marketplace to go, and it happened quite quickly. This is the tag for the regular trading hours close. I'm not interested in the previous day low to get attacked, because we're not using the Picasso's for value gap entries like this for previous day closes, lows, highs, right? We're not really looking for the draw liquidity to happen, but we're looking for the price to draw towards regular trading hours close or open, right? So regular trading hours close gets delivered, but this is not it. The marketplace has actually been able to find a top here, resistance at the 5 minutes fair value gap, runs to the previous day low, and something interesting starts to happen while we look to go lower and lower and lower, right? I'm not able to participate in this. We're literally just not able to participate because I was not able to take an entry here from the 5 minutes fair value gap once the regular trading hours range got close. But the lower we got, the closer to the draw liquidity we got, because this was my initial draw liquidity for the day 21.510. I look for a possible retracement back into the range. Okay, so while it's looking for that, what do we have? We have a failure here to go to the weekly low, which is fine, but something very interesting happens here. With the retracement happening, I'm not participating in this neither. I'm still interested for the price to continue lower, but yes, because the sell side here from the hourly chart is taken, I'm interested in this retracement. But this retracement for me is not something that I want to participate in. I want this to become a possible trade entry short because we're building a little bit of premium where I can actually go short from this. So what happens here? We have a few fair value gaps opening up. We have this 1 minute fair value gap getting inverted right here. I'm not going long here. I'm not interested in higher prices just yet, because weekly liquidity is not tagged, and bam, the marketplace starts breaking lower, and we have a inverse fair value gap here offered. So what do? I actually put my order right here. I even had it all filmed for you guys while it's executing on this, but we've never been able to get to the point of entry for me because I missed on this one, and I literally was talking to myself in terms of, okay, is this breakaway gap going to hold in the price? Should I be entering already? What am I actually going to do with this actual position, right? I never got tagged into the trade, but I allowed the marketplace to run lower because my trade entry was this breakaway gap right here. I was never able to get into the position because I was hoping that the marketplace would just tag it and run away from it, leaving the breakaway gap open here. But we started running lower, opening up for a YouTube 2022 entry. We have a big fair value gap here opening up, and we have another fair value gap opening up here. So I'm not gonna look for this one to get tagged because I'm waiting for the breakaway gap to remain open, and I wait, right? I don't get tagged just yet because I'm just not really precise with the marketplace. And I got into the trade down here once I really saw the confirmation, right? I saw this breakaway gap allowing me to take this entry short that I never took actually. This breakaway gap remaining open, right? So I enter my trade right here while as the marketplace starts bouncing a little bit higher, and we start allowing this to run lower, right? I think I had 2 contracts here. There's a small fair value gap right here that holds in the price initially, but we started breaking below it. We're not interested for 21.529.5 to get tagged because we already started running lower, leaving this breakaway gap open, so my stop loss can be this tight, right? I'm not afraid for this to get tagged. Look how beautifully the 50% level of this fair value gap holds in the price here. Once we invert this, my stop loss goes kind of to break even. My stop loss goes to a place where I'm happy with this position. We're probably gonna run this low, or maybe we're just gonna take the whole weekly liquidity away from her. Take a look at what happens here. I'm gonna remove this. Even though the breakaway gap is open and everything, I'm not interested in any other fair value gap to get tagged, right? This gets inverted. So this is where I put my trade stop. We make like $500 on it, and we say, okay, fine by us. We're not gonna be interested in this no more. We're just gonna allow the marketplace to run. And it was a very good trade by me because the marketplace just started consolidating, not even taking the weekly low afterwards, okay? Last thing but not least, I'm gonna keep this interesting. We saw a drawn liquidity for Tuesday's delivery here with a lot of equal highs here at the Asian Open. This at New York Open not being able to tag it. And the marketplace just started running lower. And it actually found a bottom, and it actually gave us a trade entry that pushed the marketplace back to what? To equilibrium. But I said I'm gonna keep it juicy. I'm gonna make this review on my Discord community. And if you want to see the review itself, do give us a pass. We have a free trial running right now on our Discord server. Find the entry to it down below. I'm gonna analyze this trade entry only for the members of the community itself. And for now, this is gonna be it. I very much hope you found this insightful. you find those trade entries reasonable, knowing the knowledge that we're sharing with you guys. And this is gonna be it from me today. See you next week. Bye.